Hello and welcome to the Airline Weekly Lounge. I'm your host Gordon Smith and I'm joined as usual by Jay Shebbeck. In part one, we're finding out if Ryanair continued its world-class profitability streak, and in part two, we're unpacking the key aviation takeaways from the Skift Global Forum East. Hi Jay, how's it going?
All right, Gordon, good to have you back, quote unquote. We're still geographically separated, but you're back home rather than in on the road, right?
Indeed. As much as I love being in the sky and being in the airport and everything else, part of this industry that we know and love, it is great to be back at my humble little desk in Lisbon, Portugal, speaking to you, Jay, and thanks for Meghna for filling in last week. We are talking this week about Ryanair in part one and the Global Forum East in part two. I'm not going to go into too much detail there. I'll save that for the second half of the show, but it was a great event. Stick around for that discussion, Jay. But Ryanair, I don't think it needs any introduction. It is an absolute monster. It doesn't matter whether you enjoy the business model, whether you've ever flown with them, you cannot deny that they are disruptive to a degree that to ignore what is happening at Ryanair is frankly beyond foolish. It's negligent if you're in this industry and you don't care about Ryanair. Jay, for the 1% of people that maybe don't know if Ryanair is going to be profitable or not this quarter, put them out of their misery. Did they have a good quarter? Spoiler alert, yes, they did. The real question here is, how good a quarter was it?
Okay, the answer to the original question is yes, they did have a good quarter. The answer to your second question, how good was it? It was absolutely fantastic. And that shouldn't surprise anyone because it is the summer quarter. But even by summer standards, they did really, really, really well. 36% operating margin. And for those of you that follow these numbers, that is very un-airline like. Not used to seeing an airline make that kind of margin. Now, that is pretty typical for Ryanair to earn 30 plus in the summer. But that was even a little bit more than normal. They did 33 last year, so 33 to 36. This was their best summer since 2017 by this measure, by operating margin. So there's the answer to your question, your second question there, Gordon. It was a spectacular quarter for Ryanair.
Illyrian team obviously very happy with that. Jay, what were the factors that they pinned against those strong numbers, and particularly looking at what has happened since last summer? Because some of our regular readers at Skift will be knowing that Dennis Shaw, our founding editor there, he's been looking at the OTA pirates and everything else, the online travel agents, and Rana had a reasonably high-profile spat with them. There have been a lot of developments in that space in the past year, but we've also had areas like fuel, like labor, competition, consolidation. There's a lot going on, Jay. So tell us what Ryanair said around the factors that led to that figure.
Sure. Yeah, there are a few detailed reasons of why they had such a great quarter. One of them, you alluded to the online travel agencies. They did have a dispute with some of the big ones across Europe last year. They settled that dispute and thereafter won back some of that business. So that helped a lot. They did pay less for fuel. Ryanair, by the way, is one of the most active fuel hedgers in the industry. A lot of airlines, particularly in the US, have stopped hedging fuel, thinking it was just wasn't worth it in the end. It was almost like paying very high priced insurance. Some people think about it. For Ryanair, for a variety of reasons, it just works well for them. And so they'll hedge 85% of their fuel needs. And that worked out well. They locked it in at a lower price this year than last. And incidentally, the price that they've got it locked in through 2027 is even lower yet. So they're set up to save a lot of money. Some other factors include, just the mere fact that competitively, some of their rival airlines are having some trouble, Wizz Air being one of them. And then I'll say more broadly, the couple big themes. I mean, one is that Ryanair is just an amazing operator at keeping their costs low and even their non-fuel costs. And we've talked on many occasions over the years in the past about how Ryanair is able to do that through growth, through its labor strategy, through its airport strategy, and a whole bunch of other ways. Won't get into that now. Very important point to make here also, Ryanair is really taking advantage of a very, very strong European tourism sector. And that's been a big theme really for Europe and its economy throughout the post pandemic era. I caught some of you may have seen in the Wall Street Journal, had a really interesting article on Europe's economies. And the title was Europe's Role Reversal. The problem economies are now farther north. And this whole article is about how, if you remember, like 15 years ago, there was this big, European sovereign debt crisis, and it was very concentrated in the Mediterranean countries, the Greeces and Italys and Spains. Whereas the northern countries, France, Germany, UK, were stronger. Now there's kind of been a role reversal. I mean, countries like, Spain's economy grew almost 4%, inflation adjusted last year, which is pretty good for a mature economy. That's pretty strong. Um, and then the big reason why these countries in the south, these sort of countries that have lower per capita incomes, why they're performing so well post pandemic, I think is captured in this one sentence here, this one phrase here in the article, quote unquote, a surge in tourism is partly responsible for the outperformance. I might have changed that word partly to just say greatly responsible for the outperformance. It's been really, it's been really, and remember, it's not just people flying from, let's say, London to Italy on a Ryanair flight. Ryanair is also benefiting from someone flying from New York to London, spending a couple of days in London, and then getting on a Ryanair flight to Rome. That's a pretty common thing for people to do, to fly over from the United States or Canada or Asia or the Middle East or Africa or whatever. They go to one spot and then they move around within the country. And in past generations, they might have done that by rail, which they still might, but now it's very common to get a cheap flight on Ryanair. So I just wanted to highlight that. A lot of things going right for Ryanair and for Europe's tourism industry in general right now.
For sure. And O'Leary and team did highlight that they are very aware that this is a cyclical industry. They know better than anyone of that. So they did hint that they kind of knew that this was. I listened into the call yesterday as well, Jay, as we're recording here on the 4th of November. And
I hope you didn't have any children around.
I certainly did not. No, I would. Social services would be involved if I had children in the room. The air turns blue when O'Leary gets on the call.
Yeah, a few profane comments from O'Leary, which nobody should be surprised about.
No, we keep our language far more ladylike on the podcast here, Jay. But there was a sort of sense I got that they knew that the good times couldn't last forever, but they're kind of braced for it. And actually, O'Leary's point around the UK performance and Rachel Reeves, the Chancellor of the Exchequer, as we say in the UK, it's essentially the finance secretary, the finance minister. We've got a budget coming up at the end of November in the UK, and that's essentially when the Treasury pulls the various levers, increases taxes, cuts, whatever it may be. So O'Leary and team were asked by one of the financial analysts on the call, what do you make of this? And obviously he had some choice words for Rachel Reeves, as he does for Ursula von der Leyen and various other politicians across Europe. But he actually did make a broader point that said, actually, we don't really mind if the UK economy tanks within reason, because actually that will just simply move people, O'Leary argues, from higher priced rivals, such as what he calls British Airways and even EasyJet, over to Ryanair. So he said it's kind of win-win. If the economy does well, then the rising tide lifts all boats. And if it doesn't do too well, then people are going to move across to Ryanair. So I thought that was a humorous point. But back to my broader thesis, it feels like Ryanair, come what may, are in a very, very strong position. And what did you make, Jay, about the comments of paying down the debt, being debt-free by next year? One of the other analysts on the call said, do you not want a little bit of debt? There's no shame in the airline industry in having a bit of debt, especially when you can get favorable interest rates like Ryanair can with its rock-solid investment rating. Any color on that, or did that strike you as being notable?
Well, they just have such an amazing balance sheet. I mean, it was so good that they were able to really make it through COVID without having to even, they took on some debt during COVID, but they didn't need a bailout. They didn't need so they're, able to pay that. I mean, they just produce so much cash that they have the luxury of being able to say, yeah, do we want to hold some, low cost debt, or do we just want to be totally debt free? And, our investors will like that for some reason. So it's just another one of Ryanair's many strategic advantages, that they just have such a fortress balance sheet that they can go out and, I mean, they could just anytime can go out and buy aircraft. They can, really have so much financial flexibility.
And they did make the point as well that they're in a relatively light stage of the capex cycle. That will change, and they'll probably take on a bit of debt eventually. So a short-term debt-free moment, but I think it's probably quite symbolic, like you suggest, Jay, that almost proving that they can do it, and then moving back to maybe slightly more regular programming next year and
Yeah, and
beyond.
remember too that they've had sort of a, let's say, slower stream in aircraft deliveries than they expected because of the Boeing delays, but those arrivals are picking up now as Boeing increases production.
Yes.
And then over, by the time they say about spring 2027, in time for their peak summer season, they hope to finally get the Max 10s. That's the larger version. And so, as you just mentioned, Gordon, they will have to spend. There'll be more capital outlay as those aircraft arrive. But don't worry, Ryanair will have no problem paying for those.
And he was quite flattering about Stephanie Pope, as he has been in recent months, who's chairing a Boeing commercial, and the broader team there. It sounded like O'Leary and gang were quite pleased with performance, getting the rates up in Seattle, and also the quality as well of the aircraft that they're receiving. And we also got a little bit of color, even though Ryanair aren't taking the Max 7, the indications that he was getting from Boeing is that despite the US government shutdown, the certification process was progressing reasonably well, and that would impact the Max 7, but then also the Max 10, which has obviously got exposure for Ryanair. Did you have any thoughts on that, Jay?
Yeah, just I mean, it does seem like and they're certainly not the first airline to say that Boeing really is getting its act together now. They do have
From a very low base.
from a very low base. Yeah, obviously they've had tremendous amount of problems, but in just very literal terms, they went from, let's see, I don't want to do it from memory here. Okay, so they went from 38 max units per month to now they're producing 42. And Ryanair, this is a quote from O'Leary. I think it's O'Leary or one of the Ryanair execs anyway. Um, quote unquote, we think the FAA will increase that to 46 in March or April of next year. So you can see the pace is really picking up. Now there's no telling exactly when that Max 10 will be certified. It keeps getting pushed back. The government shutdown in the US certainly doesn't help. But they seem to think, O'Leary and his friends here seem to think that Q3 2026 it'll get certification. And then, as I mentioned before, they expect to have it in their schedule for the summer 2027 peak. So yeah, at this point, just a matter of can will Boeing be able to execute, and will the FAA certify it when on the schedule that Ryanair expects? We'll find out.
The general direction of travel I get is that they're broadly happy to see some of the green taxes being rolled back, and they will praise those and move assets where they're going to get the biggest bang for their buck. But I'm a little cynical, Jay. You're always going to need the very big economies as part of your network. Yes, it's one thing to say, well, we'll do some more flying from Sweden or Albania or Slovakia, whoever it may be, but you're still going to need the very large economies, the Germanys, the Frances, the UKs of this world to really supercharge your network.
All right, I don't like to do this, Gordon. I know you're going to hate me for it,
Go ahead.
but I'm going to quiz you. What is Ryanair's number one country market by total seats? This is from Sirium Dio. What
Uh,
country do they have more seats flying to and from than any other?
Fewer play seats, Italy.
Very okay. Maybe you're not going to hate me because that's when you do your homework, when you're smart, you're ready for the quiz there. So you pass with flying colors.
Thank goodness for that. I know they've got strong domestic in Italy as well.
Italy is number one. Yeah. So they are obviously an Irish airline, but Italy is their biggest market. Spain, number two, UK, number three, Ireland, number four, Poland, actually, number five now. And this is just some looking by Q4 seats. So you're absolutely right. They do depend on big country markets like Italy and Spain with huge tourist sectors.
Okay, that's Ryanair, and we'll obviously keep you abreast of what happens with Wizz and EasyJet and other European LCCs in the upcoming issues of Airline Weekly, as and when we get the Q3 numbers. Before we go into the break, a quick reminder to send any questions or comments that you might have for us to podcast@skift.com. That's podcast with an S at the end. And please don't forget to follow or subscribe to the podcast wherever you're listening or watching. And if you are enjoying the show, please rate us 5 stars or leave us a positive review so we can continue to spread the word about the Airline Weekly Lounge. Don't go anywhere. We're talking all things Abu Dhabi after the break. Hello and welcome back to the Airline Weekly Lounge. I'm Gordon Smith, joined as usual by co-host Jay Shabbat. Part 1, we were discussing Ryanair. Part 2, we are discussing the key takeaways, let's say, from the Skift Global Forum East, which was held last week in Abu Dhabi, the capital of the UAE, Jay. You weren't able to join us, but I was flying the flag for all things aviation. What were your thoughts? Where do you want to begin? Because there was a lot going on at the event, but from an aviation point of view, and let's assume that everyone listening to this podcast is involved in the aviation world, or at least has a passing interest in it, let's really drill it down to just the 3 core aviation speakers. Oman Air, we had the CEO, Con Corfiatis, we had the CEO of Abu Dhabi Airports, Elena Solini, and then we had Antonio Neves, the CEO of the Etihad Aviation Group. Which of the 3 would you like to kick off with, Jay?
Yeah, well, maybe we can start with the last one, Etihad, and I just should say the one great thing about your ability to talk about to the 2 airline CEOs in particular is that these are airlines that are not publicly traded, which means there's not a lot of public information about these carriers. So it's always nice to get an opportunity to talk directly to the source there. So yeah, why don't we start with Etihad? What did Mr. Neves have to say in broad terms? Maybe you want to highlight a couple of things there.
Yeah, for sure. Obviously, he was speaking on his home turf, but this is a airline that is growing incredibly quickly and has a lot of positive messaging around Etihad at the moment. It feels like they can do no wrong. The load factors are up, the capacity is just growing enormously, and you would expect a CEO in their home city to sort of support that sort of positive narrative. But honestly, there is a lot to be said for what Etihad's doing right now. You do not need to be an aviation historian to know that things have not gone so well for Etihad when they've previously tried to grow. Nothing to do with the current management team that's going back a decade plus, but there are some of those ghouls in the closet. We are still in spooky season after all, who might be sort of creeping out and thinking, well, you're growing pretty quickly there. How sustainable is that? And I put that question to Antonio, and he said, this is completely different. We don't do it if it isn't improving the customer service and if it isn't making money. So he described this time as our time, Etihad's time, that is, but really emphasizing that disciplined mandate. Grow only when you're making money and being able to keep the customer service there, because we've seen that time and time again, Jay, when airlines grow very quickly, things get scrappy. Airline route planners get greedy in terms of spreading the fleet too thinly, or they haven't been able to get their experienced staff to train up all the junior staff to the same standard, and it just all gets a little watered down. And what you had as original product, whatever that product may have been, really starts to fray at the edges. But put some numbers on it. Etihad is now operating about 300 flights a day, and it has announced or launched 31 new destinations in the past year. And with the greatest of respect to regional airlines and regional travelers, these are not just little pond jumping flights. This is not just like your 1 and 2 hours flights within the region. Some of these are very, very long. They're going to Charlotte in the US, which is obviously no mean feat. They're really expanding into the Far East, Hanoi, Taipei, and others. Lots of new development as well into the Indian subcontinent. Navasi expects the airline can sustain this growth between 10 to 15% for the next 7 years, 5 to 7 years, but also a big emphasis not just on new routes, but also frequencies. So he was saying schedule is the real product, and he flagged Bangkok going to 5 daily as matching that ambition. And he said, not all of that is going to be with the wide bodies. They've got the new A321LRs, which joined the fleet just a couple of months ago. So they will be right-sizing the fleet as well. And Neves also spoke more broadly about fleet harmonization and cabin harmonization. He says having a harmonized fleet, he thinks, is frankly overrated. And Etihad does have still a fairly diverse fleet compared to others of its size. But he said the bigger issue is getting cabin harmonization. So standardizing that product is really, really important from a cabin perspective. There's obviously operational benefits there, but also passenger experience benefits. I've been on some very elderly Etihad aircraft with a very, very old product and then transferred within 30 minutes or 40 minutes through to state of the art A350-1000, and it is like night and day. So I can see why Nevish and the team will be wanting to join up all of that. Some other takeaways. He cited the US CBP pre-clearance in the Abu Dhabi airport as being a real asset, and I got the impression as well that that's something they'll be looking to leverage a little bit more. But he said that because the CBP lets Etihad's US-bound customers arrive domestically and make onward connections, he highlighted Boston here with onward connections with JetBlue or American, they can do that in as little as 45 minutes. A real competitive edge there, even if the airline isn't able to explicitly charge a premium for that. There's a lot going on. Jay, what was your take from Nevish's comments? Did you listen back to the conversation in full?
Yeah, well, I read what you wrote in Airline Weekly, and all interesting stuff. It does seem a little bit on the ambitious side with those elevated double-digit rates of annual growth that they plan for the next 5 to 7 years. They do. I'm not sure if you mentioned this, but Wizz Air pulled out of Abu Dhabi. Is that right, or they scaled that back?
Yeah, so Wizz Air's Abu Dhabi subsidiary, which was a joint venture with ADQ and with Wizz Air in Europe, that has ceased trading. So there is still a limited Wizz Air footprint in the Gulf region, but that's with aircraft from outside flying in. So, for example, getting from the UK down to Saudi.
Right. So that's all good. And with just a little bit of time remaining, I would like to hear a little bit about Oman Air. Anything that struck you from your conversation with the CEO there?
Yeah. So much to unpack there. So, Con Corfiatis, that might be a regular listener, sort of picking that up there. Oh, who's that, Con? Yes, he was the former CEO of Flydeal, but he was previously in Singapore and other parts of the world. Oman Air is an airline that has kind of been overshadowed, let's say, by the other regional giants, but they are in the middle of a transformation process. Con said they were about, quote, halfway through a deep reset that prioritizes higher yield point-to-point traffic over the old transfer heavy model. What does that mean in practice? Direct sales have surged in the past 12 months from roughly a quarter to 3/4 almost of bookings. And then how about this? App transactions. So they just transformed their app in Oman. 91% of direct sales in Oman were through the app in September. So a lot of transformation efforts going on there from a digital perspective, and then from a route network perspective as well. Point to point now accounts for 65% of Oman Air's traffic, with a target to reach around 70%, and that's with that much cleaner distribution strategy, linking up new routes and adding to existing routes. But it's fair to say that Oman Air still got some pretty heavy lifting to do. They are now a member of the One World Alliance. They joined that over the summer, and they said that's now really, really helping in terms of just supercharging connectivity. I did ask Con as well about Avios, with all of their new One World friends, not least the IAG squad. Will they be adopting Avios for their loyalty program? He said that was sort of under consideration, and he didn't rule it out, but he didn't say yes. So my impression is that it'll definitely be one of the front runners if it's not the ultimate selection. But some movement there in loyalty. And I also had an opportunity to ask him about sort of more of a macro issue, the progress towards net zero in 2050. And he actually said, he was quite candid on this, I respected him for it. He said he was slightly less optimistic on the net zero timing, largely due to supply side realities, and warning that the record aircraft order book could test market resilience before the decade's end. But what we were talking about maybe 5 years ago, certainly pre-pandemic, about this bright new future with SAF flowing everywhere and hydrogen aircraft on the way. I think there's a little bit of a realization. We've got 25 years to get to net zero in this industry. It's not going to be easy. And with the OEMs and engine makers all saying, it's coming, but it's not going to be fast. I think Con was actually being quite honest and just verbalizing what a lot of people in the industry are thinking, that, we will probably get there, but it's not going to be maybe on the timescale that we expected.
Yeah, great stuff, Gordon. I'll ask you finally, have you ever flown Oman Air?
I have not. No, for my
No,
sins,
no.
I have yet to fly Oman Air. He was speaking more broadly about Oman being a fantastic destination and how sometimes those looking into the Middle East and the Gulf region even sort of homogenize it and think, well, I've been to Dubai. I don't need to go to Saudi or Oman or Jordan or anywhere else in that region. And he said, no, 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 no. You wouldn't homogenize Europe and say, well, I've been to Portugal. I didn't go to Poland. That it's that same sort of thinking. So he did encourage people to come and visit, as you would expect him to. But point to
No, I've
point,
heard that as well. I've heard it
point to
was a
point's a
nice
big
place to
driver.
visit. Yeah, I've heard that as well, that it's a nice place to visit. I haven't been myself, but yeah, that's you can see why when they say that they're getting more point to point traffic, you'd have to presume a lot of that is people coming in for tourism. Maybe they're having some success. They meaning Oman Air, but also the country and its tourism authorities are having some success in bringing in more traffic. So that's yeah, perhaps an up and coming destination in that region.
For sure. We didn't get to Abu Dhabi airports, but Skift subscribers, you can go back and watch all the full videos there on skift.com. And yeah, as Jay alludes, a little bit of a recap as well in the latest issue of Airline Weekly, Jay. Speaking of Skift events, in not even a month's time, in now less than a month, we will have the Skift Aviation Forum in Fort Worth, Texas. I'll be there. Jay will be there. Megan will be there. Lots of your favorite faces from Skift, both behind the scenes and in terms of editorial. Go to live.skift.com for the latest agenda and importantly to buy a ticket. But a reminder that as a fully card-carrying Airline Weekly subscriber, you get a one in-person ticket to join us in Texas, free of charge, complimentary, I think, as the marketing team like us to say. So we would love to see you in Fort Worth. Any clues as to what the topic might be this week?
Well, we've got a lot going on because we, we're still in the earnings parade here
Oh,
for
yes.
third quarter. So we, as we're talking today, it's Tuesday, November 4th. So we have Indigo, and our colleague Peden, I saw, wrote something about their earnings on the Skift website. I'll do a deeper dive on that for the newsletter. And who else do we have? Of course, the Ryanair earnings.
Air France KLM towards the end of the week,
Oh yeah, yeah.
IAG.
We've got the big hitters in Europe. That's right.
Oh, yes.
That's right.
Lots to unpack.
Lots to unpack, and some more LCC fun in the U.S. with Frontier and Allegiant. Yeah, there'll be plenty to keep everybody from falling asleep. Hopefully,
that's a low threshold, Jay, but I think we make it.
yeah. I don't know. Maybe some people use the newsletter as their version of sleep aid. But, whatever you use it for, we're happy to have you as a reader.
Happy to help as long as you pay for it. And if you're not paying for it, go to airlineweekly.com. You can get a free trial issue there and find out all the fuss is about. Great. Enjoyed that, Jay. Thanks as always for your insights and analysis. Thanks also to our producer today, Will. And wherever you are in the world, thanks for listening, and we'll catch you next time. Bye for now. Whether you're listening to us on Spotify, Apple, or wherever you get your podcasts, please make sure to subscribe, rate us 5 stars, or leave us a positive review. This really helps us get the word out about the Airline Weekly Lounge, so we can continue to bring you this podcast every week, absolutely free of charge. And if you're watching us on YouTube, make sure to subscribe to the Skift channel and hit the notification bell to find out whenever a new video drops.